Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elconin, along with Brianna Velasquez, and we have Serge Berger on the line. He's head trader and investment strategist at the Steady Trader. Serge, you're well rested for the weekend and ready to attack the markets this week.
Yeah, I think you have to be. It's to me, it seems to be like it could be a little bit of a make or break week. Although we've arguably had that potential every
Every
week,
week.
year to date. But it just feels like with options expiration and just sort of seasonally where we are, it's probably a pretty critical time for the market to make a stand or just give up.
Yeah, let's talk a little bit about the option expiration. We talk a lot about the the weekly calls and puts, big open interest in that, and how it kind of seems to be ping. The 30s. Let's just take it as a stock like Twitter. If there's huge open interest in the 30 calls, a lot of time you'll see resistance at that level, or if it pumps up above 30, it will come back down to it. Is that something you use for like an indication maybe for a weekly play or just something to keep aware of?
Yeah, I definitely follow options very closely. Actually, I just took a look at the skew index, the CBOE skew, and there's a lot of talk of the market falling apart here, and at some point, and I do think we'll see weakness ultimately in the autumn at some point. But the skew index traditionally is a pretty good leading indicator, not an immediate term indicator, but like if it rises quite dramatically, then you usually are fairly close to a top, and vice versa. And that thing hasn't done anything yet, so it's just really difficult for me to see how this market's going to fall apart in the immediate term. Although of course everything's possible, but I think the odds are not that great.
Yeah, Scott Radler talked about this also being a kind of a significant week in the market as well. You
Hmm.
had that the worries last week, and then just kind of bounce back from it. I mean, I like to look at particular levels in the index here. I'm just bringing the chart up here of your skew to show that. Do you keep do you what do you like? What's your primary indicator? I mean, for me, it's the S&P futures. I pick my levels in that. Do you have just something that Dow or what do you like to keep an eye on?
I I mean, I don't like to use a single factor model, so to speak, but I just use the S&P. I'll use like the overnight level, so it's really more of a futures
Okay.
guided thing. But I like to look at multiple things. I need to kind of see a little bit just of a general risk on, risk off mode in the broader market. So to me, it's important where what the rest of the market does, including options and volatility. So it's not just one thing; it's really kind of a bunch of things together, but it also kind of depends a little bit where we are in the time of year. And I think, because every time, every few months we're in a different spot, or arguably every day we're in a different spot. But right now we really have the Fed right front and center. We have options expiration week. We have oil tanking. So there's different focus point now than it was just, in June where we had Greece, for example, right?
Also, seasonal patterns here. I know that's something that you keep an eye on. I mean, historically, you talk about, September and October, being, traditionally bad months for the market. But now you're seeing some, favorable seasonal strength in mid to late August. That's exactly where we're at right now. Is that playing, something you're going to be keeping an eye on, a factor in the market this week and for the remainder of the month?
Yeah, so essentially it's really four things that I think right now put the odds in favor of the upside. For one, first from a pure price perspective, which we touched on before, really is that V-shaped reversal from last Wednesday. So if you look at the S&P 2050 to 2060 in the cash index and on a daily closing basis, I think really is important. If we close below there, I think we do open up towards 2000, 1980, something like that. So that's number one. So we have to find risk in terms of price. Number two is the options expiration phenomena. We tend to see rallies, or we have at least seen many times this year rallies into the options expiration Friday. So that would be this Friday. Thirdly, we have the seasonal tendencies for a rally mid to late August, so that's there. And fourth, we talked about before, I think bearishness just isn't there. It just, put the call ratio as the investor sentiment. It's just way too neutral, if not bearish. And so all those things to me favor at least a further sideways slow there. Let's put it that way.
So you like to
instead of.
follow investor sentiment. You do that by watching the put call ratio. Is there any other sentiment indicators you like to use, like the taxi driver asking you about buying Apple, or do you have any anecdotal things you'd like to add to that?
Well, the AI is a good one. The taxi driver analogy actually works very well, but it's not a trading indicator. That's something more structural. Like if in top of the internet bubble in the year 2000, everyone was buying stocks, including the guy that was tinkering with your car. Then of course that's more, that's not going to be something where the next day you need to sell your stocks, but that's something that you should take to heart, I think, from an investing perspective.
All right, I gotta get your take here on the recent price action in Tesla. You get a secondary offering last week, and Elon Musk reveals that he's going to buy, a decent portion of it. Never, I'm watching this thing. Never really trades near the secondary price. One of the underwriters of the secondary is Morgan Stanley. Morgan
Hmm.
Stanley comes out this morning and upgrades the stock. It puts a $465 price target on it. Boy, there has to be some happy customers over there at Morgan Stanley that got a piece of that secondary.
Yes, absolutely. And the unfortunate reality is, being having worked on the sell side for long enough, is that these kind of things continue to play out, and it's just a little bit sad, to be honest with you. But more to the point, I don't know if you read the research note this morning. I kind of skimmed through it. Basically, it's not like this is a price target for next week. What's interesting though is, and rather comical, even on my Twitter stream where I have the trustworthy people on there as opposed to the contra stream where that's just kind of like for giggles. Um, the uh, the But what this guy is basically dreaming up is an entire new business model that hasn't really even been announced, or is maybe not even close to being announced. So it's a little bit comical, but quite frankly, I think that the points he's making are fairly valid. So, does that mean you have to buy Tesla right here, right now? It's up, what is it, up 5% or something, I suppose, in pre-market. I'm not sure because I actually have a little ebook out there on analyst ratings on Benzinga, and the empirical evidence is that usually these kind of moves get faded at least to some extent. So you probably have time to buy it, even if this is your only guide to buy it.
Yeah, Adam Jones is pretty good though. I followed his calls over the years. He's been pretty accurate. I mean,
Hmm.
this one just kind of strikes me as odd. Not the upgrade, but the price target increase, and wow, up to I think 465. That's incredible. Well, we're coming up near the end of earnings season, and at the end of earnings season, we have a lot of retailers, and I know one that you and I have been talking about for a while. I know you've tried to catch it a few times. Is Walmart. And boy, oh boy, I mean, you're buying it here in July. Just has gone nowhere. Trading in a trading range rate 72 to 74. I mean, any feelings on Walmart here going into earnings?
Yeah, we talk about it every time I come on the show, and I think we should because it is an important point, particularly since I've tried to make it happen a little bit. I mean, it's really just been stuck in that range. Technically, it's probably setting up for a nice post earnings move. I don't really want to make a bet ahead of it, honestly. I haven't really looked at the options just yet. I believe earnings are out Wednesday, I'm assuming, or
Yep,
maybe Thursday.
Wednesday, I believe.
So yeah, so we have another couple of days to kind of figure out what the options are trying to tell us. But I don't know. I mean, are you trying to get ahead of this earnings report?
No,
I just
I mean I mean I wouldn't be short into it. I mean that's the thing. It's a
right.
consolidation here. I guess if you look at the consolidation of the trend here, I mean it's just due for a move. I mean, and
I agree.
I'm sure
As is
that
the broader market, by the way. As is the broader
yeah,
market,
yeah,
right?
but we could be. How long have we been saying that? I mean,
Forever. Well, the same thing in the Walmart. We've been saying it's going to bounce for since what, January, or maybe let's call it March.
well, we
You
haven't
know?
exactly been wrong. I mean, it's
No, no, no,
it
no.
just hasn't
That's it.
gone anywhere. I mean, a little bit of dividend protection in there, buying the issue too. You just look at a lot of times if you want to say the trend is is how far back you going to look. Well, this is a very long term uptrend here. consolidation, but it's after a big decline. So still, I was hoping it would get closer to 70. It didn't. We'll see what kind of earnings it delivers to the street. Just want to touch on a few commodities with you here. And Barron's calling for the $20 crude and then to bounce. I wish I was as good as them here. I still get the feeling that there's a large commercials holding the black gold here and looking for a flush out of that. Send it. I mean, I think 20. I mean, does I don't know. I don't think we'll ever see $20 oil.
I think one thing that we forget about oil and a lot of other commodities out there is the technological innovation. So basically, there's a lot of people that over the past 10 years have called for oil to skyrocket because it's a precious commodity that we're running out of. The problem is we're finding new sources, so technology is getting better. So from that, like if you go by that perspective, and now with maybe the Iran sanctions that come off, this really could go into an absolute tailspin. But I think then you buy it. Right here, it's got too much obvious support, quite frankly, for me to really make a stand for it. You know what I mean? I just wish there was a real flush from here. And I would be more prone to then try it for a dip as opposed to right here where it's maybe a little bit too obvious and we're off 60 basis points this morning.
Yeah, moving up. If you're talking about gold, you got to talk about or oil. Talk about gold here, and had the long consolidation period at the 1100, just bounced around. Now looks like we're trying to turn up here. Is it a trade? Is it a change in a long-term trend here in the gold market?
So I'm long the gold miners. I've been trading in and out of it, and I've sort of kept a core position now in different accounts for a little bit. Um, the gold miners, I know a lot of people say there's no longer a proxy to gold. I disagree. I do think that there's always going to be a correlation over a certain time point frames, especially when there's momentum back in gold, right? And that's really what we're trying to do here. So I think gold, it's not something I really need to go blind and buy 20% of my fund like sounds like Druckenmiller did. But I don't, but I think we have to. So people are trying to dump all commodities into one bucket, and that is, that's something we've seen more and more over the past few months in the press. Commodities are actually a very, very well diversified asset class. So that's why trend following works so well in commodities and a little bit less in equities actually if you do it through indices, because it's just because pork belly goes up doesn't mean that timber has to go down or up or something like that. So there's really not a whole lot of correlations. Obviously the metals are more correlated to each other than versus other things. So we think we have to be a little bit careful, how we look at commodities as an asset class that goes up and down together. So from that perspective, I'm more bullish on gold than I am on oil right now, just from the recent price action at the very least.
And also, we're going to get, the Fed, you talked to half of our guests, and they're totally convinced they're going to have a rate hike in September. You talk to other halves, and some don't see it until, sometime in 2016. I mean, certainly not seeing any inflationary trends here in the commodities. What are you looking for out of the Fed at their next meeting?
I'm not a big person on being highly having high convictions on something that I just really have no edge on, and I don't think people have an edge on this. During our weekly hedge fund call on Thursday, we went through a couple scenarios, and we're just saying, listen, obviously the data doesn't support, as far as we're concerned, the data does not support a rate hike necessarily, but if it's politically motivated and they just want to raise rates and get off the 0% boundary that we've talked about for some time, then then so be it. But I tend to think, given where we are cyclically and what we've seen in economic data and corporate earnings, by the way, which have now slowed for a few quarters in a row, I think there's a real risk of them having to cut rates again if they raise them.
Yeah, there you go. I mean, and that would just show total chaos in the
No,
markets.
that
Or,
would be horrendous.
yeah, it would. Chris Ass was talking in earlier, and some of the refiners have really benefited. Your Valero has benefited from the change in oil prices. You've also had some other ones, but he owns a refiner, Marathon Oil, and he's kind of scratching his head here as to why there's been so much weakness in this issue. Is that something you have any take on Marathon Oil here? Actually making a new low for the move in today's
Yeah.
session, starting to come back.
I used to really trade this name quite a lot. I think it was a couple years ago at this point. The issue, if you look at, if you're a student of market history, you understand that when you have to look at market correlation. So Marathon Oil is quite unlikely to start doing anything positive until either the oil services stocks start doing something, or oil itself on the upside. So I don't really think you need to look at this as a single issue. I would prefer to look at this at the underlyings first, and then see if you can use Marathon to maybe get a little bit of leverage. But this thing is just in a free fall. If you get a real washout hammer kind of thing at the end of the day, maybe you buy it for a dip. But until you see the commodity turn, or the OIH or something like that as more of a broader ETF turn, I don't know if you have any other advice there,
No,
Joel,
no,
but I
I,
just
I don't, I don't. I mean, it's just when stocks are making new lows, it's time to go here, and you're kind of making that same thing or same assessment. We got a question here. I wish I would have gotten a little bit earlier for Rob Hood. LII wanted to see if you see any continued upside here. We're looking at Lennox International Incorporated. I guess if I would have talked to him off the air, saw this a few minutes earlier, I'd say, wow, anything, 125, that's a key area. All time high made on Friday at 125.17, 125.08 today. Definitely forming some resistance here. Any talk on this one? LII, Lennox International.
Yeah, sure, Lennox. I mean, I'm just looking at the pure price action, which is really what I think you have to pay focus on right here. So my general rule is if you have three stellar or consistent updays in a row, you usually start to take some profits. I don't know where Rob bought the stock,
Right?
but so I just think this is something where you probably need to. I wouldn't chase it higher if you don't have a position, and if you have a position, that certainly take some profit. That's just about as simple and straightforward of advice I can,
Sometimes
or
that's sometimes the best approach in the markets. Keep it
I mean, would
simple.
you wouldn't chase it higher
I
here,
wouldn't
would you?
chase it higher here, and if I was long it, and I didn't want to get. I mean, if I was long, I probably would have got out at like 120. But just move the stop up. A lot of times when I see
Exactly.
a
You can do
move
that,
up,
sure.
let the market. Friday's low. That was the all-time highest low. Not too sure many people use that opinion, but 122.18. Keeping on that all-time high close 125.05. That's back up in the 125 handle. So those are two levels like to keep an eye on. Just one more stock before we let you go here. Have you been following the saga of lumber liquidators?
So I remember discussing this and this gentleman he's a great guy, and he's a good subscriber of the Study Trader, but he is in the cabinet business, and he has been telling me that lumber liquidators is plummeting, and that housing stocks, and this he told me this in March or something, right after, or in February, I guess, right after the stock dropped, and so you're telling me that this is something that's indicative of lumber prices going lower, which obviously in part it is, and that the housing market's going to crash. So the housing market's has basically just gotten stronger since, and housing stocks are pushing new highs, but this stock has structural issues. So can you play this thing for a bounce? Yes. But there used to be a guy by the name of George Fontaines. I don't know if you remember who that was over at Optionetics. And he used to say that if there's companies that have accounting irregularities, which is part of the issue here, you want to stay the heck away from the stock, because you never know if the next day or the next 5 minutes something new happens. And then this stock can get clipped another 10% in no time. So personally, I wouldn't touch it.
Yeah, with the trade and all the stuff that's going on with 60 Minutes. Something you got to keep an eye on the headlines. Dennis was looking to be a little bit of a fader here. Not sure if he got a trade off this morning. Opened up at 13. 13.60, 13.43 low. Couldn't sneak back over $14. Got a small call position in here. I kind of wish I would have sold into that Friday melee, but I'm keeping an eye on that close, 14.02. That's been
Hmm.
the highest close here since you go back until August 5th. August 4th, you had an 18.36 close, and that was before the earnings. We've been on the line with Serge Berger, head trader and investment strategist at the Steady Trader. Joins us every Monday at 9:20. Give us his outlook on the markets. Covered a lot today, Serge. Have a great week. We'll talk to you again next Monday.
Thanks. Have a good week.